Hi, this is Daniela Cambone in Fort Lauderdale, Florida, where we just wrapped a fantastic Gold Stock Analyst Day. Here to tell you that our beloved guest, Rick Rule, who is one of the people I respect most in the natural resource sector, is partnering with my company, Stansberry Research, in a major way. It's something we have never done before, and it could be a pivotal moment for you personally. Rick warns that we are at a unique moment in history, the likes of which he has never seen in his 50 years of investing in the natural resource sector. And he says if you get this one thing right, you may never have to worry about money ever again. So for all the details of his big prediction and the project that Rick is working on, go to rickevent.com right now. Again, that's rickevent.com to hear about the once-in-a-lifetime financial event Rick says is happening right now and will impact nearly every asset you own. Let's get to our segment today. Hi, this is Daniela Cambone, continuing with our coverage, Gold Stock Analyst Day in Fort Lauderdale, Florida, now with the gold and silver analyst, Garrett Goggin. Garrett, always good to be with you.
Great, Danny. Thank you.
Yeah, it's always
nice to see you
always
too.
a great conference that you and John put on. Want to talk silver prices with you. Also want to talk gold prices. I feel there's a lot of energy surrounding the silver producers. I think you have more silver producers this year. Maybe I'm wrong, but yet we don't see this reflected in the price of silver yet, right? There's quite a lag. So there's energy for silver. You know, I had Randy Smallwood, chair of the World Gold Council, saying he actually likes silver more than gold. So it's like, great, everyone likes silver. We hear how you need it and everything, but when is it going to be silver's time? Garrett?
You know, we've all been waiting a while for the price of silver to do well, but you know, I like silver, you know, as an investment also. And you know, you just look at the supply demand that comes out basically every year by the World Silver Survey, and you know, the production keeps going down every year. The demand keeps going up. You throw in, you know, electric vehicles, you throw in solar, you throw in all the green energy stuff. The usage of silver is, you know, going parabolic. It's going astronomic, and the supply keeps decreasing because there hasn't been really many major deposits found over the past 20 years. It's getting tougher and tougher to mine silver. Like the 80% of the world's silver comes from Mexico, and Mexico is not a great place to operate anymore because AMLO, who knows what he's going to do the next day. So you need to step out. Silver is a risky investment, but you need to step out and take some political risk as well. You need to look at Bolivia. You need to look at Morocco because those are underexploited areas.
You can't just play it safe necessarily, like, you know, I don't want to pick on First Majestic, but with Jarrett Canyon, they thought maybe U.S. safe, let's go there. That's not necessarily the solution.
No, you know, the United States is, you know, it's expensive to operate in. You know, it's a first world country. If you step out to Bolivia, if you step out to Morocco, the cost of labor is extremely low. Your cost of mines is extremely low, and you know, it makes for an extremely, you know, creative, you know, mine.
Yeah. Well, on that note, you have Aya Silver that's mining in Morocco. Talk to me about some, because we know the usual suspects. We know who've been around: First Majestic, Hecla, Silvercore. But talk to me about this kind of new energy in the silver space of companies that you're eyeing that you think are interesting.
Well, you know.
And I'm not asking you to pick favorites. I know it's like choosing amongst your favorite children.
It's really fun having this conference here because it's basically like the all-star team of the gold mine and the silver mining industry. And, you know, having Peter here to tie it all together because he knows all those, all the executives. And he works with a lot of the 2 or 3 of the different companies out there. So it's great having them all together, and you really get a, you know, who's who inside baseball of, you know, the whole sector. You know, and basically, you know, it all follows, you know, Archie's rule. You know, grade is king. You need to find extremely high-grade deposits. Aya has been, you know, delivering amazing drill holes for over 2 years from Zagounder, and they're mining it right now. And Benoit, one of the things that is a common thread between all the companies that I like, that I prefer. All the executives, they're good guys. They're trustworthy guys.
Well, Benoit LaSalle, CEO of Aya, he used to be with Semifo.
He did a great job at Semifo. They own shares in the companies. They look at everything on a free cash flow, profit, ounce production on a per share basis. You need to look at that. Some of these mining companies out there, they'll grow from 100,000 gold ounces to 200,000 to 400,000 to 1 million gold ounces, and their share price goes down, you know, 50%, 60% along the way. Why? Because on a per share basis, they're losing value because they're not accretive deals. The management's getting bonuses because they keep increasing production, but shareholders keep, you know, getting shafted.
Yeah,
Yep.
basically.
So you need to find the companies that are looking at everything on a per share metric, and those are the companies that we prefer with a high grade deposit. And once the things start aligning, then it looks like a great opportunity.
And the other thing I liked about Peter's talk is that he kind of put things in perspective. With people wanting a $50 or $100 kind of silver price, you kind of broke those fallacies. So talk to me a little bit about your price projection. I mean, when you hear these, and I know you've been uber bullish in the past. I mean, have you changed your tune?
No, not at all. Silver's a volatile metal, but bottom line, everything's coming together today. It's all about Archie's rule. You need to find the high grade deposits because Archie's rule, it has the price of silver on the x-axis, so it goes further out. But what happens is people will take a low grade deposit and they'll say, listen, it doesn't look great right now, but if the price of silver goes to 50, look at how much money we're going to make. It's going to be worth billions of dollars. But you know what? You need to adjust the operating costs as well, because what drove gold and silver higher? It's inflation. So inflation is going to drive your costs higher. So what happens is that lower grade deposit, those costs are going to go up 2-3 times, and it's still going to be an uneconomic deposit. So therefore, if you find the deposits in companies with extremely high grade and extremely accretive projects, those projects that are the best now, when the price of silver rips higher, those are going to be the best projects then as well.
And I'm not saying this to be promotional at all. I really believe it's educational. And that's why it's important to come out to these conferences or to subscribe to newsletters like yours, because you do the homework. You kind of, because there's so many companies, it's overwhelming. If you went to PDAC, you'd be confronted with how many companies pitching you.
Hundreds.
You guys are doing the homework, saying, so you're basically focusing on the companies with high grade, with the grade.
With the grade, yep. And then, the silver industry, it's a byproduct, so you usually have gold along with it. You've got lead along with it. You have zinc along with it. Every company reports their production different. Some do silver equivalent, some do, byproduct costs.
You reminded me of something. Let's wrap with this. What do you think of this movement of silver miners, turning their focus to gold almost?
Yeah.
Do you agree with that or not? I get it's because it's harder and harder to find silver projects, but are they losing focus?
Money talks. Everything is bottom line money. Gold mine is more profitable than mining silver.
Right.
The average cash cost is, I don't know, $900 for a price of gold, so the margin's like 50%. The average cash cost for the silver industry, it's probably like $15, $16. So the margins are, less in the silver industry, which is why Pan American operated 4 silver mines that were barely, only marginally profitable. They go after the gold mines. Now they're gushing with cash.
Right.
So it's just a function of profitability. But, when the silver price, increases in the future and hopefully the margins increase as well, it will, be more profitable.
So
then.
You're still talking triple-digit silver then?
At some point.
At some point.
It's just the supply and demand equation is just, it doesn't line up,
Yeah.
And at some point, it's got to jump in price in order to even out the market.
Garrett Goggin, I appreciate you coming and stopping by.
Great. Thanks, Danny.
Thank you so much for watching. We'll have more great coverage coming your way, so be sure to stay tuned to the Daniela Cambone Show here on Stansberry Research.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.